Good morning, everyone. Thank you for joining us today for the 10th edition of our reverse pitch session. So the monthly hour where we give the stage to investment professionals to pitch their funds and share valuable insights on the best practices to secure funding for your innovative projects. I'm Laura Gaspard, your Equity Belgium advisor, your host for the session. The presentation decks and the recording of the pitches will be shared with you by email to review them again afterwards. We have selected for you 3 eminent speakers for today's pitches. We have Dan Van Paris of Junction Growth Investors, Raphaël Anart of Tioga Capital, and Michael Engelman of imec.xpand. We are very excited to welcome them in our 10th edition. After each presentation, there will be time for Q&A. During that time, participants can directly ask questions by activating their microphone or type them in the chat, and we will share them with the speakers. So I'm sure everyone is very excited that the speaker, as well as the speakers, feel right before the pitches. So let's not keep our experts wait any longer and start with our first pitch of today. Dan, are you ready to give us more insight on Junction Growth Investors?
Ready, Laura. Thank you. Thank you all for joining us this afternoon. I'm going to introduce Junction Growth Investors, fund for which I am working with, which is entirely focused on the green energy transition. And whilst probably most of you are having a small lunch, I hope to entertain you and provide you a bit more insights on where we can hopefully add some value or be relevant for some of you, be it as an entrepreneur or as a co-investor, as those might also be on the line. So very briefly first on myself, and then I'm going to share a couple of slides on the screen. I'm Dan, I'm a principal working at Junction Growth Investors. 35 years old, have a background. First, I worked in mergers and acquisitions at Lazard in the Benelux office here in Brussels. And secondly, thereafter, I worked at Smile Invest, which is an evergreen investment fund. Focused a bit broader and on cash flow positive companies, and joined Junction Growth Investors 9 months ago to help the energy transition, which we believe needs scale. So I'm going to start by sharing my screen, if I have the right one. If you can hopefully all see my screen, that is amazing. Please let me know if that's not the case. So this slide sums it up. We are here to invest in the energy transition because we believe that the time is urgent to invest. This slide says that the world is already at plus 1.1 degrees Celsius. We deliberately did not update it to stress that actually we are already beyond that point. I read yesterday morning that we're already at 1.5 degrees heating prior to the as compared to the pre-industrial level. So we try to help that as an investment fund. And where do we do and more? So first of all, a bit on the high level. Junction Growth Investors is a venture capital and private equity closed-end investment fund. We have a target size of 115 million, which is the size of our company, and we aim to invest that into late-stage venture capital, often scale-ups and growth companies that already have a cash flow positive business model. So you can really see us as a Series A investor, potentially Series B investor, but also cash flow positive companies. I think for this presentations, we're going to be focused on the late stage VC, as I think most companies here will be looking for capital raises. So our investment ticket is a sweet spot between 5 and 10 million, and we can go as low as 2 million and up to 15 million. But preferably, we have a strategy towards deploying 5 to 10 million. We're pan-European, so we're really focused across Europe. It's also very well visible in our current portfolio, where we have investments in Switzerland, Austria, 3 in the Netherlands, and 1 in Portugal. We've also looked at opportunities in Scandinavia. We're truly a pan-European investment company, which has the flexibility to provide both minority stakes and majority stakes, given that we have the right governance treaty to have that. So that's a bit on our investment setup. What sectors do we target? Because the green energy transition can be quite broad. It's actually in two focus areas. So one is climate change mitigation and the other is climate change adaptation on both business models that we work in. The first one, climate change mitigation, is very simply put any business model that can help CO2 reduction. So making this society that we have and the green energy less dependent on fossil fuels. And that can go through various business models. Obviously, investments in renewables is a very obvious one, but there are a lot of ancillary services which also require funding, such as grid enhancing technologies, the current electricity grid, which needs to be strengthened, HVAC, so that our building and construction activities become more optimal and less CO2 dependent, but also services business models, the installers, where you could pursue a buy and build strategy, all fall within our investment scope. Have some other examples on here, but in essence, we invest in both software, hardware, and services business models within the energy transition. And we exclude infrastructure. So we don't invest in windmills, we don't invest in solar parks themselves, but any service, be it hardware, software, or services, are of relevance for us. But an important element is that for us, it needs to have both a positive ESG impact and also a positive financial return. So we're still an investment fund, and we're aiming to realize some capital gains for our investors as well. I think this broadly sums up a bit the key dynamics of our fund. We do believe we set ourselves apart by focusing on the green energy transitioning and focusing on the investment tickets between 5 and 10 million. But also a very important element is the investment team, because which makes us quite unique is that we're a mix of both entrepreneurs and financial investors in the founding team. So you see here in the middle, Bruno, Dirk, Pieter-Jan, and Vincent, who have founded the company. You can find myself on the top right, for those who are looking, not that important. But Bruno, Dirk, Pieter-Jan, and Vincent have a mix of both entrepreneurial and financial investors, are very broad. Pieter-Jan has founded Restore, which was the market leader in demand-side response at the time of their exit to Centrica, which is a UK utility. And he actually raised venture capital funding throughout the lifetime of his company. He was a founder there, raised money at BMW, at Akkermans and Van Haren, and then successfully sold to Centrica, as I mentioned. Bruno has run a very similar course. He has founded Lampiris, also at one point raised funding actually at the GIMF, where you can see Dirk, who was active at GIMF at the time, and then became part of the board of directors of Bruno, whose company Lampiris. So Bruno also has experience in founding a company, raising the company to a certain level, which was cash flow positive in this case, attracting a PE investor, and then exiting to Total, as most of the people undoubtedly know. So Dirk, he has been working at GIMF for a very long time, lots of experience in PE and M&A, and Vincent worked at Invent Capital, which is a Czech climate tech investment company. So you really have a nice mix of both entrepreneurial experience and investor experience, which can be very relevant for companies at the companies who are raising funds. Next to that, we have an international advisory board, because we are based in Antwerp, but we have European ambitions. Hence, we surrounded ourselves with people who are from across Europe and have been founder or very senior management in the companies. I'm not going to run through them, but they're both Dutch, German, Belgian nationalities on this page. Here are a couple of the investments that we have done so far. So as you can see, lots of international companies across different companies. Two of them are in grid enhancing technologies, Ampassimon and Enaida. Three of them are software companies, Hology, bottom left, HiSoft at the bottom, and Eternity top right, and AET is a hardware company. So we're very keen still to deploy capital to help founders in raising their benchmarks and raising their money for the next stages of their growth trajectory. We've worked with other investors as well, but I'm not going to run through all the companies in detail. I think for us, which is important, is summarized on this slide, which is more in detail. I'm not going to run it through in all the details again. But to sum it up, Junction, it's a private equity and venture capital funds that focuses solely on the green energy transition, which is 150 million target size, so sweet spot 5 to 10 million, and where we have a nice mix of entrepreneurs and investors to assist you in your trajectory towards growth, towards a sustainable business model. That, in summary, is Junction Growth Investors. So, Laura, I'm heading back towards you. I don't know if any questions have come up in the meantime.
Well, not in the chat. Thank you very much, Dan, for your presentation. So are there any questions at the moment? Okay. Well, we had two questions for you, Dan. So how does Junction ensure a balance between ESG impact and financial returns in its portfolio investments?
It's a very good question, because it's actually very important to us, as we are an Article 9 fund, which means that we can call ourselves a deep green, really green investment company. And what does that mean in essence? In essence, that means that we have also put in sustainability criteria on ourselves as an LP, as a GP, so as investors ourselves. We also aim to reduce our CO2 exposure through any means that we can find that achievable. And also at our companies, we aim to assist them in reducing their CO2 and their overall impact on the sustainable environment. How do we do that? We have Barbara, which is at the bottom right, who is an investment manager in our company, but is also helping actively the portfolio companies in reducing their CO2 impact. So very practical, we established 2 KPIs with our portfolio companies, on which we aim to work to maximize that impact and make strategic initiatives to maximize our impact on that element. That can be very broad, related to the business model. For example, Eternity is a software company for PV installations. Well, we try to assess that the faster they can deploy their software, the faster the installation companies can put solar PV installations on top of the roofs. So they are therefore accelerating the energy transition. It's really that throughput time that we need to focus for them to be as efficient as possible, which at the same time also improves their business model. To give a very concrete example, a second one is, for example, very obviously, if at your offices you're still heating by fossil fuels and there's a possibility to use a heat pump, we shouldn't neglect those opportunities as well to both internally and externally reduce the CO2 impact. So for us, it's really an important criteria next to the obvious financial ones.
Thank you very much for this precise answer. And just another question, really fast. So what measures are taken to support the scalability of the business you invest in, especially in the energy transition sector?
Well, for us, there's One criteria which is important is that already there's a minimum viability of the business model. So it needs to be product ready. It's called TRL 9, technology readiness level, which basically means the product needs to be finalized beyond the proof of concept, and the challenges are still in commercial growth, in upscaling production opportunities. Next to that, we aim to assist the companies in scaling faster through our experience as founders before that, and obviously through the capital that we have deployed. So for us, assessing the scalability of an investment is first on where does the company stand right now, and do we have the added value to where we can think to accelerate the scalability and the growth trajectory. So hopefully that answers your question.
Yes, thank you very much, as well as for your presentation. So now, Raphael, maybe you can share Tioga Capital's story with us. And well, due to some technical issues, I will share Raphael's presentation. So, just a minute. Can you all see my screen? Is it working? Raphael, can you? Okay.
I can see the screen, but not the presentation yet, but it's loading. Now it works.
Okay, it works. Okay, great. Then let's go.
Cool. And I will just then let you know when we can move to the next slide, if that works. Hey everyone, I'm Raphael. I work at Tioga Capital. It's a Web3 fund based in Belgium. We have a team of 7. And yeah, a couple of information in the following pages. Laura, you can move to the slide number 2. In terms of focus on our side, so it's really, as I mentioned, it's Web3. What does Web3 mean? It's basically the next wave of the internet. That means that we back company that use blockchain as a technology. That can be everything from heavy blockchain across the stack to light touch, like just some blockchain components in some use cases associated to your product that would make sense. Laura, can you still hear me and see me?
Yes, I can hear you. Well, not see you because I'm in presentation mode.
Okay, because I'm still stuck on the slide number 1, but maybe
okay,
it's just
sorry.
on my side. We can go to slide number 2.
Yeah.
Okay. Yeah. So in terms of ticket size for us, so we typically invest between 1 and 2 million per companies, which means that from pre-seed to Series A, we lead the rounds, or we tend to co-lead as well for Series A. We have 2 funds, or at least one fund that is live, and the second fund that is in the making, almost live, and we'll be announcing that in the coming weeks. Fund size was close to $100 million for the first, and then that will be more or less the same amount for the second fund. And where we differentiate from a lot of the other funds in that space is the focus on Europe. I will explain more in details in the presentation why we decided to focus on Europe, but that's one of our key value proposition and beliefs as well. And then in terms of time horizon, I think it's fairly normal for VCs. We tend to invest on a 5 to 10 year time horizon. Moving on to the next slide, the founding team. So we have 3 managing directors, all from Belgium. They started Tioga in 2020, end of the year, and they come from very different backgrounds. So Nicolas has done management consulting and private equity in Belgium, but as well in the US, while Michiel comes more with a crypto native background. So he had before Tioga a hedge fund, which was purely focused on Bitcoin. And then we have Jürgen Ingels, who is from the startup side and VC. He founded Clear to Pay back in the days, which he exited. And then he built venture fund called SmartFin, which is mostly investing in fintech. So the three of them came together in 2020, and since then they have increased the team size quite a bit. So we can move to the next slide. So we have now a team of 7 in the investment team, and then 2 in back office. My role at Tioga is principal. My background before joining Tioga, so I did my bachelor in Belgium at ULB in engineering. That was from 2013 to 2016, I believe. Then I moved to the Netherlands, TU Delft, to do my master. And then I joined McKinsey in Belgium. I spent almost 4 years there, doing a lot of blockchain work there for institutions, mostly banks, stock exchanges, and funds. And that was that last part that I enjoyed the most, working with funds, doing due diligence. But it was very late stage type of due diligence, like Series C, Series D. I wanted something earlier stage. So I left McKinsey in 2022, and I got to know the Tioga team and joined them back then as an associate. Then got promoted to principal. Next to me in the team, yeah, we have my colleagues that are shown on the screen. It's a mix of background. Again, I don't want to go too much into details there, but maybe one important point is that in terms of verticals, so really areas where we focus on in the Web3 space, we have very different focus. Like I do a lot of consumer RWA, but my colleagues just focus on different things that would allow us to specialize much more into some areas and also being more competitive on winning those deals. So if we move to the next slide, so the slide on the focus on Europe, that's a really important point for us. So when we founded Tioga, we realized there was a huge dislocation in the market between the US and Europe. Of course, much more capital in the US. The data is a little bit old, it's like 2021, but there was back then 17 times more capital allocated into startups than in Europe. For in the end, a number of deals that was more or less the same, just like 2x more deals, at least in that space in Web3, 2 times more deals in the US than in Europe. So we saw this opportunity to penetrate that market. And then next to that, there are a bunch of other reasons why Europe is an interesting market for Web3. One is the regulations. There's much more clarity in Europe versus other countries. This is thanks to the MiCA framework, for those who know about it. And then, of course, there is a lot of talent. There are some cities that are hosting, um, Web3 ecosystems that are pretty big, like Lisbon nowadays, London, of course, or Paris. And then, yeah, a couple of other reasons on the slide, but basically Europe is at least home for 75 to 80% of our investments. And then if we move to the next slide, which is about our portfolio. We have 29 companies, and those are spread across a bunch of verticals. And I don't know to what extent the audience is familiar with the Web3 space. I guess everyone is fairly new, so I might give a little bit of overlay on some of those verticals. But like finance is 1/3 of our portfolio. That means companies building in what we call DeFi, which is a decentralized finance, basically using a blockchain as a more efficient way for things like settlements, payments, or capital formation. And then RWA, which we call, it's the acronym for real world assets, which basically means taking financial assets and bringing them to the blockchain. So things like equities, real estate, bonds, commodities, art, all those assets that exist in the real world. It's really about bringing them to the blockchain to create efficiencies, transparency, and a bunch of other benefits. In that company, we backed 10 players, which are on the slide. I believe one of them is in Belgium, PVO1. The founder is Maxime Bonan. was also the founder of B2C2, which he sold in 2020 to a Japanese bank for a big amount. I don't know if it's public, but it was a decent amount. Then we have, after finance, we have consumer. That's quite a big focus of ours. One of the names that you might recognize here is Venly. Team is based out of Antwerp. They did a big Series A in 2021 or 2022. And then, of course, Gem, who is also a Belgian founder. And this was our first exit. We sold the company to OpenSea, which is the biggest NFT marketplace in Web3. Voilà, I will probably stop here. There are some other areas, but I don't want to go too much into the details here. A couple other Belgian companies maybe would include NIM, which is coming from KU Leuven, and they have an advanced technology for everything privacy related. And then, then we can move on to the next slide, Laura, which is further about the focus at Tioga. So as I mentioned, RWA is a big one. I also briefly explained what it was. Coming from a background where we worked a lot with institutions, like all of them, like Bain and McKinsey, we really understand the importance of bringing those assets on chain. And we know that big companies in finance are looking at it, which is also why we decided to focus on that mainly. But then some of the other factors or sectors would include DePIN, which is the acronym for Decentralized Physical Infrastructure. The idea of DePIN is to deploy hardware with lower cost than what's possible in a traditional model. So back in the days at McKinsey, I used to do some work in telecom, and we were deploying fibers in Brussels and other cities. One of the key challenges was to get always the licenses to get in people's home and streets to deploy that. A Web3 model of that would be you will set up your own antenna on top of your house, like on the roof, and then you would get rewarded for doing that job in real time. So you basically provide internet for not only yourself, but the neighbors as well, and you get rewarded. But so if a lot of people do that, you end up with a strong internet coverage. And that's why we call it a decentralized physical network, because it's not one company coming and deploying everything, but just all the participants in the network deploying that. Other areas would include security. That's really important in crypto because we are dealing with a lot of money that is staying on the blockchain. Decentralized AI, also important to make sure that there is no monopoly of AI, making sure that the models are distributed across different companies and players. And then app chains, I will not go into that. It's probably too technical for here. So we can go to the next slide. And that's just one comment. In RWA, we organized last year in Belgium the biggest conference in that space. That was at the Merode in Brussels. We had like 300 participants and a lot of big names in that space. And we'll do it again next year in Cannes. So if everyone is interested to participate, if you're in the space or not, feel free to text me and I can always extend you an invite. Then if we move to, I guess the almost final slide 11, is just a picture of our founders and ourselves. We try to do every year a retreat with all the founders from the portfolio, typically 24 hours, sometimes 2 days, just for them to get to know each other and sharing all the learnings that they get. Like some of them have big backgrounds as founder, they have done companies before, they did Series A, B, and some of them C. And then others are just out of university getting started learning. There is a lot that can be shared between them, but it's also an opportunity for us to know them better and to also like give a few lectures on some topics that we believe are relevant for them. So I guess that's pretty much it about Tioga. If there's any questions, happy to take them.
Thank you very much, Raphael, for your presentation. Are there any questions at the moment? Okay, well, I have two. Oh, okay, we have one. So, question from Tara. I'm no expert, but heard blockchain was intense in energy needs. How do you estimate the ESG's positive impacts, or is it not a criteria for the investment?
It's a great question. So 3 points here. The first one is that historically, it used to be very energy consuming. The reason for that is that most blockchains were using an algorithm called proof of work, which essentially requires you to spend energy to verify the information on the blockchain. So you would literally have a bunch of machines, miners that would run in some countries and then consume a lot of energy. What happened though in last year, or actually the year before, is that most of the blockchain transitioned to another system called proof of stake, which doesn't require those machines anymore. So that basically led to a reduction of 99.99% of the energy consumption. The only key blockchain that is still using that proof of work algorithm is the Bitcoin blockchain, which is also the biggest. So this one still has an impact when it comes to that. But that was the first point. The second point is that a lot of the energy that is used for Bitcoin is stranded. That means that this is energy that is produced remotely, and it would be lost if it was to be transported. So actually, it enables to actually use that energy, but also to stabilize the grid. So what you see in some countries is that Bitcoin mining, so the machines, are actually used as loads to stabilize the network grid, because you want to avoid all those fluctuations in energy use. So that's the second point. And then the third one, there's an increasingly big share of the energy that is coming from renewable sources. There are a couple of reports on that, including from Cambridge University. I'm not sure about what's the exact mix nowadays. Last time I checked, it was somewhere between 60-65%, but that was like 18 months ago. So it's probably much more by now.
Thank you very much for your answer, Raphael. Any other question from the audience? Okay, so another question. How has Tioga Capital's team expertise, including their backgrounds in private equity and venture capital, shaped the fund's approach to Web3 investments? If you can maybe provide us with an answer on that one.
A couple of things here. One is the background on the private equity side, and also I would add consulting led us to do much more investment in the finance vertical or finance sector of Web3, just because this is one, the sector that we understand the most, but also two, where we have the most connections. Because when some of the portfolio companies are providing some services in that space, we can easily connect them with a bunch of banks and private equity players and funds and all that. So that's for the private equity side. Now for the VC side, you have two ways to invest in Web3. One is through equity companies, so just like a traditional VC model, and two is investing in tokens directly. Like you could just go with some of the applications like Coinbase and invest in Bitcoin, Ethereum. We also invest in tokens at much earlier stage, like a couple million valuation. But so coming back to the question, like on this VC side, that allows us to not only do the token side that a lot of people can do, but also evaluate companies on the equity front and assess things like M&A opportunities, which not all crypto investors are ready for.
Thank you very much for this question. We have a question. So what is the name of your event in Cannes next year? Is it Real World Asset Summit? So
it would be a RWA Summit. We haven't announced it yet, so you will not find anything online. You might still be able to see the event from last year, and I believe they have a Twitter page also. But yeah, we'll be announcing that probably within the next month or two.
Okay, great. Well, thank you very much for your presentation and for your answers to that interesting questions. So now, Michael, it's up to you to present us imec.xpand. So you can, great, unmute and
all right. Good afternoon.
Hear you. Good afternoon.
Yes.
So you can share your slides.
Thanks, Laura. Just a second. I hope you can see my screen.
Yes, perfect.
So I have a short introduction on imec.xpand and would like to, let's say, introduce our fund, what we are doing and how this could be relevant for you. It is 10 slides and I hope it is worth your while. To start with who we are, I mean, you're looking for capital, so I start right away with that. So who is xpand? We are the affiliated financial VC fund, closely affiliated with imec. We are technically independent, but of course, very closely working with imec. Otherwise, we wouldn't be allowed to have, let's say, the imec logo as part of our name. We have two sizable funds, a first one of 117 million and a second one of 300 millions that we are happily deploying at the moment, looking for breakthrough ideas that fit within our scope. The numbers in the middle indicate that we don't do that alone. We work within a syndicate. We have many renowned LPs, limited partners that have committed capital to our fund. We invest within the local co-investor community and also internationally with very renowned co-investors, all centered around semiconductor innovations in deep tech and health tech. So to put it simply, and I will introduce imec also with one or two slides, as soon as there are semiconductors inside, chances are very high that you will somehow be able to collaborate with imec and thereby be able to qualify as an investment for xpand. A few more numbers, and this is, I will promise this is my most boring slide. So just because it's relevant, we invest early. We believe you can never be too early, but I think our sweet spot is seed and Series A. Typical tickets are 3 till 7 million, but additional capital, of course, can be deployed. Average funding rounds are around 10 million. It can be 8 million and can go up to 20. And we are screening, of course, a large amount of ideas, especially within Europe, but also worldwide, and hoping to find the interesting parts that you might be working on. Having said that, going back to imec, you may know it or you may not know it. So it is an inter-university microelectronics center that has been founded in the 80s, the early days of nanotechnology. This is an aerial image of the sizable complex in Leuven, so right outside of Brussels, where all this is happening. By now, it's 5,000 people working on physical sciences, nanotechnology, semiconductor engineering. And you see this nice tower that I'm currently sitting there on the 5th floor. And yeah, proud to have this as my backyard. It is something that we leverage as a financial VC. Of course, we are closely working together with all the experts at imec. We are trying to get their best ideas out into the world, and we are trying to in-source great ideas from all over the world that can have a meaningful collaboration with imec. So that's, let's say, our local roots. Don't think I need to explain more about imec, but it is, of course, a great place to be and to work with. A little bit more about the global reach. So, of course, being centered in Belgium makes you almost by nature very international. There are offices in the Netherlands, in other parts of Europe, also in the US and Florida and in the West Coast. We try to have a good balance of ideas from the US, from Europe, roughly 2/3 in Europe, 1/3 in the rest of the world. We encourage companies to think wisely about where to incorporate, where to grow towards. Is your market in Asia? Is your market in the US? And also complement the team with whatever expertise is needed for that. And behind that is a team of, by now, even 11 people that you see here, myself on the lower left on the second row. it's a relatively small team, but as indicated, we have the luxury to work with many imec experts, so they are just one door away. We can find experts on quantum computing, new memory technologies, AI accelerators, whatnot. And bear in mind, it has an hardware angle to it. So we wouldn't typically invest in software companies. As indicated, there should be a semiconductor angle to it. Our deep tech portfolio, and without wanting to go into details, just to give an indication, these are some of or most of our deep tech portfolio as of last month. All of them are, let's say, somehow either coming out of imec or working together with imec by today. And to give an indication, out of this selection of, 15 companies, 2 have already achieved unicorn status and 2 are closely towards that. So that's a very great statistic that we would love to take the credits for. Of course, it's the companies that take the credit, and not always have we been, let's say, from the inception, but we believe we have been instrumental in helping the companies to achieve that, and of course also to leverage our network and our partners to help the companies. If I may just zoom in on one of these, Celestial AI, they have got a lot of news coverage. They are a US-based company with an AI accelerator and have shown a tremendous valuation increase trajectory of the past years. So from an early seed that imec.xpand was leading up to what is now a more than $1 billion valuation with very noteworthy co-investors. And we see that the fact that Xpand is investing or committing in an early stage many times is a sufficient reason for other, maybe more financially minded investors to co-invest, to tag along, to be part of the adventure. Last but not least, your take-home message. So what I hope you can take away from this, except for introducing imec, of course, we believe that our advantage is threefold. One is, let's say, this network of co-investors of reputable deep and health tech credentials that many times work together with us and that are also LPs in our fund. We believe there's an argument to be had that leveraging imec can make for better high-tech, deep tech companies. And that is something that is open to you as a startup working with us. And last but not least, we believe we are founder friendly. We're comfortable with a lot of technology risk. We understand that. We even look for it. And not unimportant, we have deep pockets to support you from an early stage up till the follow-up rounds. And having said that, my contact details here, email address, in case you would like to reach out. And of course, also otherwise through Laura or the organization, I'm sure we can get in contact and look forward to take any of your questions.
Thank you very much, Michael. Any questions from the audience right now? Well, we have 2 questions for you, Michael. How does imec.xpand assist its portfolio companies in achieving their growth and innovation goals beyond financial investments?
Yes, it's an open question. Beyond financial investments, of course, it is, I would say, the expertise that we can bring on board, and the people that I mentioned, many have been entrepreneurs themselves. We try to support you in various ways, in the sense that we would like to bring people in the board that can open a network, open doors, help the company grow. We organize academy events. We call it an Xpand Academy, where we have speakers that speak to topics that really are very relevant for C-level people within the startups, try to help them grow into this new role. And beyond that, we are very active in, let's say, promoting startups that we believe in to other investors. It's always good to have a warm introduction, and also to prepare you to never lose track of, let's say, the fundraising mindset, to already think of your next round, already think ahead what can take you to ideally an exit or of course, a product introduction.
Thank you very much for your answer. So just another question quickly. How do international partnerships contribute to your portfolio's growth? Maybe.
Yeah, so as indicated, so I think all of our ventures are highly international. So they are hiring from the get-go, of course, not only within Belgium. We also encourage companies to incorporate wherever the market is most attractive for them. So it's not that we have an only regional focus. So we very much encourage companies to think internationally, hire internationally, and also locate themselves wherever needed. So that would be, yeah, what we advocate. I hope that addresses the question.
Indeed. Thank you very much. So we've already reached the end of today's session. We hope you received the answers you were looking for from our investors. Don't hesitate to share us additional questions or address them directly to the speakers. Thank you for attending, and thank you to our speakers for the insightful presentation. We will share them with you by email tomorrow or maybe today. Next session will be in 2025. We'll keep you posted on a more precise slot. We wish you already a wonderful end of the year and a great day, and we hope to see you very soon. Thanks again for attending all those river speech sessions this year, and have a great day and a great lunch, I hope. Thank you all.
Thank you.